Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Limited impact. Bloomberg learns an early report from US intelligence has found America's bombing likely did not cripple core components of Iran's nuclear program. The Nasdaq is back. Wall Street's bulls send the tech-heavy index to a record on hopes of a lasting truce between Israel and Iran, and aided by comments from Fed Chair Jay Powell. Plus, Donald Trump showered with flattery by the NATO Secretary General, but divisions remain over that 5% defence spending target. Good morning. Happy Wednesday. So equity markets once again, stocks on the front foot after gains of 1.1% by the end of the close for European markets. Today, European futures on the Stocks 50 futures looking to add around 0.2%. Here in the UK, the FTSE 100 is currently flat at 8,787. Stateside, S&P E-minis with gains of more than 1% yesterday, currently unchanged. Nasdaq 100 then back at a record high, the first record that we've seen since February. The gains coming through, lower yields across the curve yesterday, lifted and helped, of course, by commentary from Fed Chair Jay Powell. At least the interpretation from the markets that there was a modestly dovish tilt from the Fed Chair, and softer data in terms of the consumer sentiment story as well, of course, of that truce between Israel and Iran. In terms of the picture then, as we look cross-asset, the focus remains on oil. Prices are actually up in the session today at $68 a barrel, up 1.3%, but that is after the biggest two-day drop that we've seen since 2022 for oil prices. The truce, again, shaky, but still seems to be holding, at least at this point. Euro at 116, largely unchanged for the single currency right now. The 10-year at 4.29. Yields fell about 5 basis points yesterday on Fed Chair's Jay Powell's commentary, of course, suggesting at least that he's comfortable remaining on hold for now, but talking about the different paths ahead for the Federal Reserve in the United States. MSCI Asia Pacific over, of course, in Asia. Gains of 0.3% after rallying Asian stocks by a little over 2% by the end of the close yesterday. So Bloomberg has learned that initial findings by the Pentagon have found that US airstrikes have had only a limited impact on Tehran's nuclear program. Sources tell Bloomberg that the Defense Intelligence Agency says the bombing likely did not cripple the core components of Iran's facilities below ground, including its centrifuges. Joining us now is Bloomberg Horizon's Middle East and Africa anchor Jumana Paschi. Jumana, these findings then clashing with President Trump's assessment of the attacks.
That's right. President Trump had claimed that they had totally obliterated some of those nuclear sites that they hit at over the weekend. But this latest report put out by the Pentagon itself, the Defense Intelligence Agency, suggesting that the blows didn't actually manage to administer the fatal blow that Trump had characterized. Instead, saying that at most it had set back the nuclear program by as much as 6 months. They didn't actually manage to severely cripple some of the core components of the program, especially those centrifuges that are embedded underground. Now, the White House were quick to retort. The press secretary, Caroline Leavitt, posting that the report was flat out wrong in a clear attempt to demean President Trump. The special advisor, special envoy, Steve Witkoff, took to Fox, and he also said that any characterizations that the mission didn't achieve its objective were completely preposterous. But the IAEA also weighed in. The Director General, Rafael Grossi, saying it is imperative that inspections resume as soon as possible, not only to determine the scale of the damage, but also to identify the whereabouts of that stockpile of the highly enriched uranium and where it may be right now.
Jumana, what is the current state of that ceasefire between Israel and Iran as the debate continues around how much damage was actually caused to those nuclear facilities?
Well, the truce is holding up, and the region is breathing a sigh of relief after a lot of uncertainty about the status of the ceasefire this time yesterday morning. Israel have actually now lifted their wartime measures. Life seems to be returning back to normal over there. And yesterday, the Israeli prime minister gave a speech, and he said that the immediate threats from Iran's nuclear program and ballistic missiles had been eliminated. But his military chief did caution that the campaign against Iran is far from over. Similar in Iran, the process perhaps perhaps of rebuilding or reconstituting has begun. The Iranian president yesterday also gave remarks painting what had happened as a victory for Iran, so a bit of perhaps face saving from their perspective. Overall, though, the death count over the past 12 days, 606 people were killed in Iran, and Israel Emergency Services has said that 28 people were killed, of which 4 happened in the very last hours before the ceasefire. So from this point onwards, perhaps the focus is going to shift to nuclear diplomacy and, of course, the status of that nuclear program and whether indeed the U.S. managed to inflict the damage that President Trump claims, because that is going to be crucial for where these discussions go from here.
Yeah, indeed. We continue to watch the details on that front. Bloomberg's Paschi with that update. Thank you very much. Now, Donald Trump is, meanwhile, leaving NATO members on edge at a summit in The Hague, where he remains. Hours before arriving, the US president suggested America's commitment to Article 5, that's NATO's collective defense obligation, was open to interpretation.
There's numerous definitions of Article 5, you know that, right? But I'm committed to being their friends. You know, I've become friends with many of those leaders, and I'm committed to helping them.
What do you want the role of NATO to be going forward once these other countries are spending more?
By having a unified system, I think we're going to have stronger peace, better peace, and I think we have that.
Well, Bloomberg's Europe correspondent Oliver Crook is at The Hague for us covering the summit. Joins me now, of course. Ollie, what is your reading from what we're hearing? You've been speaking to members, of course, of NATO taking part in this summit. What is your gauge as to how that summit is progressing so far?
Yeah, Tom, this is a summit that's basically fully choreographed to be sort of very upholding and sort of flattering of Donald Trump, both from the frill side to the substance of the summit. From the frill side, we saw those text messages that were sent by the Secretary General of NATO, Mark Rutte, on the plane that Trump immediately sort of posted on social media that was really speaking in very Trumpian language, you know, using a lot of cap locks, saying that there are big commitments from the Europeans and that no one has had as much leadership as the president and that he's going to have a big win here in The Hague. There was a big dinner last night at the presidential palace with the king and a number of other world leaders, and I would believe that Donald Trump was the only one who was going to actually stay in the residence last night. So all sort of choreographed from the frill side. From the substance side, this is an entire summit that has sort of hinged on this idea that everybody is going to commit to spending 5% of their GDP within NATO allies for the very first time in the alliance's history, for that to be the commitment, and that is obviously a massive step up from that 2% target. There have been a few flies in the ointments about whether or not Spain would sign on board, but I spoke to the EU High Representative Kallas yesterday. Have a listen to what she told me.
We have heard, of course, Spain raising the issues that they are raising. I think it's important that we get the decision of moving to 5%. It's a very ambitious target, also requires a lot of difficult decisions from member states. That is very clear.
So it'll be very interesting to see if there is any contact between Pedro Sanchez and Donald Trump, certainly something that the cameras will be looking out for. Another point of potential friction is with Emmanuel Macron, who a couple of days ago said that the U.S. strikes in Iran were against international law. But we should say, Tom, that stepping back and looking at where we basically got here at NATO, committing to 5% defense spending, that is an absolutely mammoth win for the Trump presidency, achieving one of its big foreign policy goals and doing so in fairly short order.
And we'll see if that at least ties in to what Trump has to say. The press conference is going to be fascinating, isn't it, Ollie? And no doubt you'll be there listening in. What should we expect to hear from the president? How volatile, how on edge are members of NATO as to how that press conference unfolds?
I mean, listen, Tom, we came into this meeting hoping that the 5% target would kind of end the conversation and hopefully Donald Trump would say something positive about NATO and reaffirm his sort of commitment to defending it. But as you just sort of alluded to in the introduction there, we had a sort of new sets of questions blown open by the president on his way over here from Air Force One, saying that basically Article 5 is open to interpretation. It means different things to different people. He would be willing to sort of defend his friends, but that he will give a full definition of what his interpretation of Article 5 is. So again, putting everybody sort of in tension and anticipation for what the president's going to say a little bit later. At 3 p.m. is when we're expecting that press conference from the president, Donald Trump. That being said, he also posted something else on his way over here, which was polling that was taken from Republicans and MAGA Republicans. And the question that was asked was, would you be in favor of supporting militarily NATO if any of the allies were attacked? And 71% of MAGA Republicans said that, yes, they would support that, which was actually less, or I should say more, than non-MAGA Republicans, which is a little surprising. 61% said that the Americans should come to the aid of NATO allies if they were attacked. So interesting that within the sort of base, there seems to be support for the NATO and Article 5. And we should say that really there only seem to be two things that really govern Donald Trump's behavior. It's the bond market and the MAGA base. And there you see some endorsement from the MAGA base in terms of responding to any sort of military threat to the NATO alliance.
Yeah, really interesting polling. We'll see to what extent that ties into the president's thinking, of course, as we look ahead to that press conference. Bloomberg's Oliver Crook on the ground for us at The Hague. Ollie, thank you. Oliver, by the way, will be speaking to the German and Latvian foreign ministers later today. We will bring those interviews to you, of course. Now to macroeconomics and what is happening at central banks, with the focus, of course, on Federal Reserve Chair Jerome Powell reiterating his view to US lawmakers yesterday that there is no rush to cut interest rates.
The effects of tariffs will depend, among other things, on their ultimate level. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance.
Let's bring in Bloomberg's Valerie Teitel now for the market reaction to this and what stood out in terms of Powell's comments, because it seems, Val, that the markets read in to Jay Powell a dovish tilt.
Yeah, that's right. We did see a rally across the Treasury curve, especially in the front end. I think we can pin it down to this comment from Jerome Powell. He was asked about what he thought about the more dovish FOMC members' view. He was asked specifically about Christopher Waller's view about tariff-induced inflation being transitory and that opening up the door for a July cut. When he was asked on that thought, his response was many paths are possible here. The fact that he didn't shut down the possibility of a July cut seemed to buoy the Treasury market. We are now seeing that probability of a July cut around 20% now priced in, so just creeping slightly higher. So we did ignite a rally in the Treasury market. Over the last two sessions, we've dropped 5 basis points in the 10-year yield, now trading south of 4.30. This was also helped by some weak consumer confidence data that was released around the same time that Powell mentioned those comments, helping these yields hit around a 2-month low. Now, again, it was this Treasury rally really aided the risk-on rally when it came to the equity market. We saw that Nasdaq 100 breach record highs for the first time since February. The Nasdaq 100 is now in the green on the year, up 5.6%. The S&P 500 isn't far behind, less than 1% away from a record high for the S&P 500 index.
OK, we'll see if it gets there, possibly today, possibly by the end of this week. Bloomberg's Valerie Teitel, thank you very much indeed. The market reaction, of course, to what we heard from Jay Powell and some slightly softer survey data coming out of the US. Here's what else to think about today then. At 1 p.m, it is going to be that NATO Secretary General press conference. We will be across that for you. Of course, we have our correspondents on the ground at The Hague. And at 3 p.m, US new home sales data comes out. We know that the housing market is under pressure, with rates still at relatively elevated levels when it comes to loans around the housing space in the US. And at 3 p.m, Powell will be testifying again. It's the second day and final day for Jay Powell testifying this time to the Senate. So, of course, we'll be across all those lines from the Fed chair, given what he had to say yesterday. You can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, terminal subscribers should go to DAYB Go for a check on what is in focus, of course, with Iran and Israel and the assessments of the damage to those nuclear facilities, of course, front and centre. Coming up, we will discuss Germany's plans for a major increase in government spending with KKR's Vincent Policard, the infrastructure spend, the defence spend, and how private capital can align with some of that, where the opportunities are around infrastructure and renewable energy in Germany and Europe. Stay with us for that conversation. Plus, President Trump surprises oil traders with an apparent U-turn on China buying Iranian oil. We'll bring you that story. This is Bloomberg. Welcome back. There was a spike in German government borrowing costs yesterday after it announced plans to borrow about 20% more than originally expected to help fund a surge in spending. The government's updated midterm finance plans includes net new borrowing of 500 billion euros through 2029. The same amount will be spent on an infrastructure programme over the next 12 years. So 500 billion euros over the next 12 years on infrastructure. Let's bring in right now Vincent, who's the partner and co-head of European infrastructure at KKR. So very well placed to talk about the opportunities around the infrastructure spend and the fiscal impulse coming out of Germany. Vincent, what are the infrastructure needs right now of Germany? To what extent will this additional government spending fill that gap? How wide is that need right now?
Good morning, Tom. Thank you for having me on the program. The needs are really gigantic. I mean, if you think about that new fund that has been defined, 500 billion sounds like a big number. But then if you look at the amount of capital that needs to get invested alone in the grids, in the power grids in Germany, about 700 billion has to be invested. And so when you do that, you haven't started investing in renewable energy, you haven't started investing in the digital infrastructure, you haven't started investing in maintaining, modernizing the existing infrastructure, bridges, tunnels, highways, all of that. So it is a big number, but there is no doubt that a lot more capital will be required for German infrastructure.
OK, so there's a massive need. Is this enough? Is the signalling and the commitment from the German government enough to see a kind of piling in of private capital?
I think the signaling is precisely the important point here. So there is a signaling that there is a willingness to spend, which we all appreciate is a departure from what Germany has done historically. There is then a signaling that a lot of the spending will have to be done on infrastructure and recognizing the need to build infrastructure as an enabler for everything else happening in the economy and society. And last but not least, there is a signaling that private capital will be required. And so the goal there is not, as I said, to fund the entire capital spending in infrastructure, but really to crowd in private capital and really achieve this partnership between public and private capital that will be required given the scale of the capital needed for the country.
And to be clear, you do expect to see that crowding in of private capital, given what we've heard from the German government. And if that is the case, what is the role that KKR will be playing?
It will be absolutely necessary, and there is a recognition that capital will be needed. We are, one of the big investors in the country when it comes to private equity in general and infrastructure in particular. In fact, if you look at the last 3 years, we had 3 very significant investments around Vantage, a towers business, and Cavis, a renewable developer, and then more recently EGC, which is a business active in energy contracting. And between those 3 investments, we put about 10 billion of capital to work in the country. So, this is a country we know well. We have already invested in the past, and we very much stand ready to do more.
OK, you stand ready to do more. Are you in conversation with the German government about partnering on projects, Vincent?
We are, and we have been for a very long time. I mean, if you think about, again, our activity in the country, we have been investing in Germany since 1999. To give you a sense of scale, about 18 billion of capital has gone in the country over those 25 years. It's about 35 different investments. And so really being in the conversation with government, in particular now that there is this recognition that the only way to get to the right answer is to really partner up and put together private and public capital. That conversation is ongoing. And, some of the conferences that have been announced by the government post-summer and, the definition of how that plan will be implemented in practice is really a big part of the conversation right now.
And which subsectors of the infrastructure story are looking most attractive to you right now?
Yeah, I mean, if you think about what we have done in the last 15 years, as I said, we are today one of the top 3 investors in the sector, and what we have done everywhere in the world, and that's true in Germany as well. Number one is really around digital infrastructure. So think about, mobile towers, think about fiber optic networks. Data centers is clearly a big part of the investment focus right now. So that's really a big part of the opportunity set in Europe and in Germany in particular. Number 2 is really around energy transition, and a lot of that energy transition starts with the grids. And this is really an area of focus in Germany because you need to have a regulation that is attracting private capital. And right now, candidly, the German regulation compared to many other frameworks in the world is not attractive enough. So something will have to happen there. And then, as I said, those two are really about the building the infrastructure of the future, digital energy transition. But you also have to invest and modernize the existing infrastructure. If you think about the bridges in Germany, if you think about the highways, a lot of that transportation infrastructure candidly has been, to some extent, neglected in the last 20, 30 years. And so a lot of capital has to go into that as well.
What is the role of blended finance, do you think? What do you expect the role of blended finance, public-private partnerships in terms of some of this financing? What kind of role will that play in the years ahead in Germany?
It will be really important. And, if you think at a place like KKR, today we manage about, almost 700 billion of capital, over 80 billion of that is infrastructure. And we can provide capital in different forms. It can be equity, it can be debt, it can be different assets in between. And so, finding the right blend, finding the right mix, to your point, between private capital, public capital, what is the risk allocation, what is the return allocation? This is really what the debate will be about. And Germany, as I said, stands in the competition, so to speak, with other countries in the world, because we have the ability to put capital anywhere in the world. And so how governments candidly and how the German government solves that and makes itself attractive as a destination for private capital will be really the focus of the debate in the months ahead.
Vincent, before we let you go, just give us a quick dollar number in terms of how much you plan and expect to deploy, given what you know now, over the next 5 to 10 years.
Yeah, if I look at what we have done historically in Europe, we invested as a firm about 12 billion in the last years. About a quarter of that was done in Germany. That number is actually already stepping up quite substantially. So if you look at 2025, we would expect to invest about 18 billion in Europe across our different strategies. And, again, Germany should be a big part and in fact, the biggest market for us. So that gives you a pretty good sense of the amount of capital that we're able to mobilize for those investments.
OK, really interesting. Vincent Policard, an important week to be talking about infrastructure spend and investment, partner and co-head of European infrastructure at KKR. Vincent, thank you. Coming up, former New York Governor Andrew Cuomo concedes defeat in the New York Democratic primary. More details are next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, some other stories making the news this Wednesday. Former New York Governor Andrew Cuomo has conceded to upstart rival Zohan Mamdani, in New York City's Democratic mayoral primary. Cuomo pitched himself as a seasoned moderate, while Mamdani was backed by the New York City branch of the Democratic Socialists of America. If elected in November's general election, 33-year-old Mamdani would become New York's youngest mayor in a century. Former New York City Mayor Michael Bloomberg, the majority owner of the parent company of Bloomberg News, endorsed Cuomo. Banca Monte dei Paschi di Siena says the ECB has authorised the bank to acquire a controlling stake in Mediobanca. Bloomberg is told Mediobanca is pushing for regulators to intervene and recently filed a formal complaint to the EU's competition regulators. And the European Union's industry chief says the bloc plans to impose retaliatory tariffs on the US if President Trump keeps the 10% baseline levy on European products. After negotiations, Brussels is rushing to clinch a deal with Washington before tariffs jump to 50% on July 9th. However, many EU officials expect most US tariffs to remain in place, even if an agreement is reached. Coming up, optimism on the markets as stocks gain and the Nasdaq hits a record. Plus, more bets on a rate cut by the Fed after comments by Jay Powell. More on all of that next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. Happy Wednesday. I'm Tom McKenzie in London. These are the stories that set your agenda. limited impact. Bloomberg learns an early report from US intelligence has found America's bombing likely did not cripple core components of Iran's nuclear program. The Nasdaq is back. Wall Street's bulls send the tech-heavy index to a record on hopes of a lasting truce between Israel and Iran, and aided by comments from Fed Chair Jay Powell. Plus, Donald Trump showered with flattery by the NATO Secretary General, but divisions remain over the 5% defence spending targets. Let's bring you a check on the markets then, with futures pointing higher in Europe after gains of a little over 1% on European stocks by the end of the close yesterday. You have, of course, the Nasdaq back in at record highs from yesterday. The first record highs, in fact, for the Nasdaq 100 since February. European futures then on the Stocks 50 futures pointing high by 0.3%, looking to build on the gains of yesterday. FTSE 100 futures here in the UK slightly more modest, currently unchanged in terms of the futures picture for UK equities. S&P E-minis also largely flat after gains of around 1.1% by the end of the close yesterday. The Nasdaq 100 looking to add 0.1% after rallying 1.5% by the end of the close on Tuesday. Let's flip the board and have a look cross assets. So we have a mixture of different elements that played in to the equity upside yesterday. Yes, it was this fragile truce, but also commentary from Fed Chair Jay Powell and a consumer sentiment survey that came in softer than expected, raising odds that possibly the Fed will pull forward cuts, and bets now for July at around 20%. Markets fully pricing in 2 cuts from the Federal Reserve. The MSCI Asia Pacific over in Asia, adding to the gains of yesterday. You saw that rally of 2% yesterday. Today, that Asian benchmark is adding 0.4%. The US benchmark 10-year is largely unchanged today after yields fell 5 basis points yesterday. 4.29 is the yield on the benchmark 10-year. Euro-dollar at 1.16 and Brent actually higher by 1.5%. But that is in the context of the biggest 2-day drop since 2022. Brent at $68 a barrel. So sources tell Bloomberg that early US intelligence findings suggest American airstrikes likely did not cripple the core components of Tehran's nuclear program below ground. Meanwhile, a fragile ceasefire between Iran and Israel appears to be holding. President Trump lashed out at both countries yesterday for early breaches.
Israel, as soon as we made the deal, they came out and they dropped a load of bombs, the likes of which I'd never seen before. The biggest load that we've seen. I'm not happy with Israel. You know, when I say, okay, now you have 12 hours, you don't go out in the first hour and just drop everything you have on them. So I'm not happy with them. I'm not happy with Iran either. But I'm really unhappy if Israel's going out this morning.
Let's go to Jerusalem now and bring in Bloomberg's Dan Williams. And Dan, of course, that soundbite was the clean version, because he did swear later on in his comments related to his frustration around Israel and Iran. But the truce does seem to be holding, at least for now. What is your take in terms of that criticism, particularly from President Trump aimed at Israel? Is that likely to be lasting, or is that kind of a short-term frustration from the US president, who, of course, had, with his team, been working the phones to ensure there was a ceasefire?
Good morning. Yes, well, it's worth noting that that very memorable clip came just 2 or 3 hours into the truce. Yesterday morning, Israel said that Iran launched a missile at it in violation of the truce. President Trump appeared to confirm that, even though the Iranians denied having done so. But then Trump came in and said to the Israelis, do not go and bomb Tehran, as Israel had threatened to do. It turned out that the Israelis already had jets on the way, fully loaded with bombs. At the last minute, they ordered them instead to divert to a secondary target, a apparently minor radar installation on the periphery of the Iranian capital, where they then launched this attack and drew a line under their retaliation for this apparent Iranian breach of the ceasefire. That would appear to be behind us now and resolved. However, you know, recrimination comes fast and furious, especially as a ceasefire between warring parties that have really no prospect of making peace would be, by its very nature, unstable, fragile, and indeed the Israeli Prime Minister said yesterday that Israel would be willing to go back in militarily should it see signs of Iran's nuclear program being reconstituted. Iran, for its part, has declared, its president today, that while the country suffered painful blows from Israel, Israel failed, as he put it, to achieve its war goals against Iran.
OK, well, that commentary from both sides important in the context of the intelligence report out of the US suggesting that the damage actually was relatively limited and may have only set that nuclear program back by a number of months rather than years. Talk to us about how that is being factored in terms of the mood, what we're hearing from government officials in Israel, and also what the mood is now and how Israelis are reacting to this truce.
I think most Israelis, like most Iranians, most people in the region, are no longer looking at the small print or the details. They're getting on with their lives. This war wasn't just a war in itself with Iran, a 12-day war. It really was a cresting of the more than 20-month-old war, regional war that began in Gaza and is really returning to Gaza. Israel's saying it's pivoting back to Gaza, where as it happens, it lost 7 soldiers yesterday in an IED attack, one of the biggest single incident losses for Israel in months. So when it comes to the issue of how much damage was dealt to the Iranian nuclear program, the Israeli chief of staff, its top general, yesterday said that as far as Israel's concerned, that program has been set back years. So already there's a clash of accounts between that and this leaked intelligence, which Bloomberg has reported on, while noting it's an initial assessment. I don't think we'll know for sure until inspectors can go back in and look at it. I don't know when Iran might allow inspectors back in, and I don't know whether Iran itself knows the extent of the damage. So I would suggest being cautious on ruling either way on this. I think there's no doubt, however, that when the Americans come in with the mightiest conventional weapons available to mankind and use them against a site like Fordo and Natanz, one can expect some very significant damage. After all, that's what these weapons were designed for.
OK, Bloomberg's Dan Williams in Jerusalem. Thank you very much indeed, with an important update, of course, out of Israel, as this truce at least holds for now. Oil prices, meanwhile, have levelled off. In fact, they're slightly higher in the session today after a steep 2-day plunge, the biggest 2-day drop since 2022. That's as traders assess the Israel-Iran ceasefire, and a further report pointing to a drop in US stockpiles. Before the reversal, crude tumbled further after President Trump announced on social media that Iran's biggest customer, China, can continue buying its oil. The move could undermine the key element of Washington's Iran policy under multiple administrations, which has aimed to cut off the regime's main source of income. For more, let's bring in Bloomberg's Stephen Stupczynski, who leads our Asia coverage. Stephen, I want to start with how oil traders are interpreting these comments from the US president around China and its ability to buy Iranian oil that is meant to be sanctioned and meant to be restricted in terms of sales to China, even though, of course, China has been the main customer for Iran in recent years.
I think, you have to look at it through the lens of, or at least the market is looking at it through the lens of Trump wants cheaper oil prices, right? Those comments, were very surprising to the market. They were surprising to officials within even the Trump administration. But it does indicate, prices fell after he made that social media remark, because if this is a weakening or the Trump administration not taking these sanctions as seriously as before, then, yeah, you could see more Iranian crude on the water. You could see the U.S. not looking to increase sanctions on Iranian crude. They've been flowing via dark fleet vessels, via, places near Malaysia, where they would change ships, and then they would then be essentially routed to China and other places. So maybe the Trump administration won't be looking so closely at that supply chain, but clearly it does indicate, I think, that he's trying to do something to show or to indicate that this peace deal, he wants something to come through, and even oil and what the U.S. looks at oil sanctions is not something that will be closely monitored. It also could be a way for them to try to create closer relations to China ahead of more deals with them, or trying to create some sort of deal with Beijing. China is a big recipient of that crude, and if the U.S. isn't going to be looking at those sanctions very strictly, then that could benefit Chinese refiners and other Chinese buyers. But again, stepping back and looking at the macro view, whatever the policy decision is, the Trump administration has always wanted cheaper oil, whether he's posting about drill baby drill or asking OPEC Plus in the past to increase production. he clearly wants consumers to pay less at the pump. And one way to do that is to allow Iran to freely export their fuel. Now, that being said, Bloomberg did speak with some officials within the administration. They say the sanctions still stand and that they still would prefer that China and others buy American oil. But it is something that it's hard to ignore when the president himself makes these kinds of statements.
OK, yeah, indeed. Bloomberg Stephen Straczynski, thank you very much indeed with the context around what we've been hearing from the US president vis-a-vis Iranian oil, with prices up in the session today. But after that drop, biggest two-day drop since 2022. Let's get more on the market reaction and bring in Tineke, Frikkee, head of UK equity research at W1M. Tineke, thank you very much indeed for standing or sitting patiently around the desk waiting for this conversation. I want to start with the macro. I want to start with what we've been hearing from Jay Powell, the Federal Reserve, of course, giving testimony yesterday. What is your expectation on the back of what we heard from Fed Chair Jay Powell as to where these cuts land if they do this year?
Yes, good morning. Jay Powell has been under a bit of a pressure by Trump, who really wants him to bring interest rates down. So not just oil prices should go down, interest rates should go down. We had a bit of pushback from Jay Powell saying that he's still in wait-and-see mode because the U.S. economy is still robust, labour market particularly. Yes, we've seen some weakening in U.S. consumer confidence. U.S. house prices weakened a little bit. But it's early days too, because obviously the tariffs have been pushed out a little bit. We've got the 10%. That seems to be OK. Let's see what happens later in July with the tariffs. So two from the Fed supporting July cuts, but we think the probability for September is probably a better one than July.
So the two cuts this year, September probably more likely than July, as markets pricing maybe close to a 20% odds of July now. What is the next catalyst for stocks then? We talk about the Nasdaq at fresh record highs. We've got the geopolitics at least on ice in the Middle East, that tension on ice, it seems, at least temporarily. What is the next catalyst then for stocks if it's not coming from the Fed until at least September?
Yes, never say never. Typically, the next set would be earnings season stats, and let's see what we hear from companies. So usually U.S. banks kick that off sort of mid-July. So geopolitics and macro will still be very important. Obviously, what happens with, is the fragile truce, is it holding between Iran and Israel? That will be critical. It'd be very interesting to see what Trump says at the NATO second day later today to see if Europe has done enough to make Trump support Europe.
Do you think defence stocks, I mean, they've been so much in vogue in recent months. Is there further to run for defence stocks, given what we're seeing in terms of the spend out of Germany and the commitments around NATO?
Well, we feel that overall expectations are quite high going in. We haven't really heard big surprises. Obviously, we had the F-35 sign up this morning from the UK, but ultimately defence stocks have been very strong. BAE is the main name in the UK. That's up 60% year to date. Rolls-Royce, similar. Babcock, who's involved in the submarines, which clearly having a lot of support, more than doubled. So when we look at valuation, what's priced in, and we look 3 year outs, they're on PEs of 20 times. So we think most of the increase in spending is in the price.
OK, so valuations are looking a little stretched, or at least it's priced in at this point to defence stocks. What is your expectation as you think about UK equities, about where the BOE goes?
Well, they're probably in a slightly similar situation to Trump. The UK economy actually has been doing OK. GDP was a little bit better than expected. Employment market seems to be robust. Inflation nudging down. So we're sort of heading in the right direction. But there's also, and there's obviously a lot of spending coming up from defence. So overall, rates can go down in the UK. But it'd probably be more of a gradual pace rather than big surprises.
FTSE 100 is up at about 8% year to date. If you want exposure to UK equity markets, where do you go at this point? Either subsectors or the benchmarks, the indexes? Do you do FTSE 100 or do you want that domestic exposure to the 250?
Yeah, well, we purely stock picking, and we particularly think, and maybe we touch on that later, that the healthcare sector has been really weak. concerns on what may happen on the FDA in the US. RFK sort of sacking everyone, saying vaccines are not necessary. That has really weighed on names like GSK, for example, one of the biggest vaccine name, but also potential tariffs, potential pricing equalization across the world. So we think these, if we talk about multiples, these growth stocks, they're trading on multiples well below 10-year averages.
OK, so pharma's looking cheap, but it's dependent on what happens on the regulatory front and on the tariff front as well when it comes to the pharmaceutical sector. Tineke, thank you very much indeed for your analysis and coming in bright and early, of course, this Wednesday. Tineke Frikkee, W1M, head of UK equity research, with that global view as well this morning. Coming up, the AI will speak shortly. We're going to interview the co-founder and CEO of an AI voice platform for automated phone calls. That is next. This is Bloomberg. Welcome back. AI startup Synthflow has raised another $20 million to drive the next wave of enterprise adoption for AI voice agents. The company has raised a total of $30 million to support global expansion and accelerate development of its AI agent platform. Very pleased to see we're joined now by the CEO and co-founder, Hakob Astabatsyan of Synthflow AI. Joining us in the studio, Hakob, good morning. What is it that you guys do that you offer to enterprise that maybe some of your competitors don't? What's the proposition?
First of all, thank you very much for having me. Synthflow is an AI agent platform that allows businesses to automate their phone calls with voice AI agents that speak like a human, understand context, and take action in real time. Businesses use it for customer support, lead qualification, or many other use cases, and the best thing about this is that AI works 24/7.
Where are you seeing the greatest adoption? Which parts of the enterprise space are signing up and adopting this technology?
The lowest hanging fruits that we have seen from the beginning have been the customer support, the L1, basically the easy customer support cases, appointment scheduling, right? All the tasks that are simple and the conversations are short, businesses were quick to adopt it. And I think we're entering now to the phase where we can serve even more complicated use cases and longer format conversations.
How much pushback do you get around data privacy, security, and what assurances do you make? What specifically do you do to assure enterprises that their data will be safe and that privacy will be safeguarded?
That is a very important topic in our industry, and the companies like us, we follow all the guidelines and compliances that are necessary to make sure that the data is safe, such as GDPR, HIPAA, or SOC 2 compliances that are absolutely necessary in our market for our customers to ensure their data is safe and private.
Which are the biggest markets for you right now?
Right now, we're focused on the US and the Western Europe.
OK, so you're based in Europe, but the biggest market is in the US. Is that because there's more risk-taking in the US because enterprises are quicker to adopt and quicker to sign contracts?
I guess you can say that US is always a bit quicker to adopt. There is a higher readiness to pay in general for the technology, but we already see also a pretty significant adoption in Europe.
Yeah. OK. What kind of revenue growth and ARR are you looking at? What is the revenue growth picture for you guys at this point?
Yeah, so we're not disclosing our revenue number, but what I can tell is that we're a relatively young company. We started 2 years ago, and we experienced 15x growth from the launch of our product, and it's so far, we're processing more than 5 million calls every month.
5 million calls every month, 15x growth, and that growth is continuing this year. You're not seeing a slowdown in adoption?
We're not seeing a slowdown in adoption, not yet.
OK. In terms of the labour force impact, and you're talking about, of course, call centre workers, essentially. Do you ultimately just get to a point where you're replacing all those call centre workers?
I don't think that AI is going to replace humans. I think that AI will augment humans. Very similar as when computers came, everyone was predicting that they are going to replace jobs. However, what happened is that humans ended up working with computers, and computers augmenting humans and even becoming more productive. And I think we will see a similar thing in AI augmenting humans, and we'll have this powerful combination of human ingenuity and AI reliability.
But why would you need a call center worker if your AI, which will continue presumably to innovate and accelerate in terms of its capabilities, why would you need call center workers in that environment?
I think the type of the work, the job positions have been shifting. So, for example, I've been seeing from my customers that they have started creating new roles, such as manager of AI agent workforce, or manager of AI agents, or head of AI, or head of AI and data. So new types of job descriptions and jobs are arising already, and it is happening. And I think that's what we will see. The type of the work, the nature of the work will change, and the humans will focus more on human-like skills like ingenuity, creativity, right, and delegate all mundane and repetitive tasks to AI agents.
Okay, interesting. We'll see how that story unfolds. Hakob, thank you very much indeed for coming into the studio on the back of that $20 million raise. Hakob Astabatsyan, co-founder and CEO of Synthflow AI. There's plenty more coming up. Stay with us. This is Bloomberg.
Despite elevated uncertainty, the economy is in a solid position. Overall, a wide set of indicators suggests that the conditions in the labor market are broadly in balance and consistent with maximum employment. The effects of tariffs will depend, among other things, on their ultimate level. Increases in tariffs this year are likely to push up prices and weigh on economic activity. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance.
So Fed Chair Jay Powell there, of course, reiterating his view that there's no need to rush to cut rates, keeping that optionality, of course, on the table for the Fed Chair, but not firmly closing the door potentially to a summer cut. So pricing then, the market's reacting. They read a dovish hint from Fed Chair Jay Powell. Fully priced in now, 2 cuts, as you can see, 59 basis points by the end of this year from the Federal Reserve. September is fully priced, but the rates, or at least the odds of a cut coming through in July, have come through a little higher. So 20%, the last time I checked, close to 20% in terms of odds or chances of a July cut from the Fed. Let's flip the board and have a look at what has been happening in terms of the consumer sentiment survey that came through from the conference board yesterday, below all estimates, and really interestingly as well, looking out to the future, the proponent or the propulsion of respondents who said that the business conditions will improve in the future, that fell the most that we've seen in about 2 years, in more than 2 years. So that's worth noting as well. Despite all of that, of course, we saw the Nasdaq getting to fresh record highs. The first record high we've seen for the Nasdaq 100, that tech-heavy index, of course, since February. What is the next catalyst then? Is it, of course, adjustments in terms of expectations, where yields go? You saw a yield drop on the 10-year of 5 basis points yesterday. Jay Powell will be giving testimony again today, but the rally was there for the Nasdaq 100 with gains of 1.5% by the end of the close yesterday. First record that we've seen, a fresh record since February. Coming up in the next 15 minutes, an exclusive interview with the Spanish Economy and Finance Minister, Kallas. That is coming up. The opening trade is up next. This is Bloomberg.